Best example. Best example. Let's say that there is a long-term capital loss or some kind of speculative business loss, purely from your taxation point of view. A speculative business loss treatment can it be set off against non-speculative businesses? No. So we know that these items cannot be set off against non-speculative business loss. Anything, it can be set off only against. Clear? It's a very standard scenario that we see in almost all your taxation provisions. Very standard. Now let's understand this idea. Let's say that if we have a speculative loss, say around 1 lakh in financial year 15-16, right? We will say that at a tax rate of 30% net, we are looking at save rupees 30,000 in financial year 16-17 or thereafter if there is a speculative profits. 16-17, 9 months I am staring at a profit. But let's say that the profit that I earned in the last 9 months is around 5 lakhs. And next 2 months or 3 months, worst case, I am looking at another profit of 1 lakh, 6 lakhs. So mentally on 6 lakh profit, I should be paying 1.8 lakhs as taxes. Correct? At 30%. But I will tell myself that 1.8 kattamata. I will pay only 1.5. Why will pay only 1.5? Because there is a brought forward loss of around 1 lakh, which will save me 30,000 taxes. Correct? Upon the saving that you are seeing right now, is it not in the nature of a benefit that is coming to you? If there is a benefit that is going to come to you, should it not appear in the balance sheet as an asset? What is an asset ultimately? Some kind of potential future monetary benefit. Isn't there a monetary benefit right now? Yes. If not for this loss in the preceding financial year, I would be paying 1.8 lakhs. Since there is a loss of 1 lakh in the preceding financial year, I end up paying only 1.5 lakhs. 30,000 benefit. This 30,000 should be shown in the balance sheet, which is what we call it as a deferred tax asset. The same logic on the opposite side for deferred tax liability. We'll all touch upon these ideas separately. But basic idea that we are just trying to capture. So now we will say this subsequent year to the extent of rupees 30,000, right? We should have shown an asset because it is expected to have a benefit. Is it not here? You can pretty much control this benefit also, because if you want, you can set off. If you don't want, you not set off. Number ishta. So it's expected to be expected in the next year. Benefit should be shown as an asset in the balance sheet asset 31/3/2016. Clear, Ayat? This asset is referred to as deferred tax asset. A crude example. We'll touch upon much better representation sometime shortly. This is the logic. So what is that we will do, sir? Our approach would be something like this. Take each and every difference between profits as per books and total income. Sharia, asset in their nature. In its nature, something called as timing difference versus permanent difference. In the timing is permanent difference. Differences that get resolved or reversed in the subsequent years. Differences that will not get reversed subsequent years. Differences that get resolved or reversed in subsequent years, we call it as timing differences. Differences that does not reverse at all are called as permanent differences. Now, how do I understand, sir? Once again, notice carefully. Most popular depreciation difference. See, in a very ideal scenario, if you buy an asset for 100 rupees, you can only charge a depreciation of 100. For taxation law, you might split the entire depreciation of 100 into 20, 18, 17, 16, whatever number over a period of, let's say, 15 years. For books, you may write off the entire thing in 5 years also, 20, 20, 20, 20, 20. But 100 ரூபாய் தானே charge பண்ண முடியும். Is it not here? The overall amount of depreciation will remain the same. So therefore, the difference in depreciation as per books and taxation purposes would ultimately be zero at the end of 10 years or 20 years. It keeps on getting adjusted. 1 year kuda irukkum, 1 year korachirukkum, it's all getting knocked off. Is it not here? Likewise, the very famous section 43B disallowance. What is that here? Anything that you can recollect? All your liabilities which would be, your expenditure which should be allowed if and only these are paid before the date of due date for filing the return of income. This is not here. If I am going to create a provision for bonus for financial year 16-17, I should have made the payment by due date of filing of return of income. Interest on loans from all your financial institutions. You can claim that as deduction if and only if you make the payment on or before the due date for filing return of income. PF payment, ESI payment, you can claim that as a deduction if and only if you are going to make the payment on or before you file the due date for filing return of income. What if you don't make the payment? You can claim only when you make the payment. But take a very classic case. 31st March 2016. Due date for filing IT return is say 30th of September. I am creating a bonus provision for around say 20 lakhs. But I am going to make the payment only for Diwali. I am creating a provision but I am not making the payment. I will release the payment only in the eve of Diwali. Diwali is somewhere in October. And therefore, I would not have paid that amount on or before 30th of September. Correct? And therefore, even though in my P&L account I would have debited, while computing total income, I will add back, stating it is getting disallowed. Oh, since I am adding back, does it mean that I can never claim this reduction at all? The answer is no. Next year's profit minus bonus previously disallowed, paid during the current financial year allowed. 4 வருஷம் add பண்ணி current year subtract பண்றோமா? Net effect zero தானே? Addition in 1 year, subtraction next year is what we call it as reversal and origination. 4 வருஷம் differences originated, current year differences are getting reversed. Is it clear, guys?